We need to follow what the insiders are doing. They have been known to sell in advance of a crash. They make it happen before we ever know what's going on. Even Warren Buffett, who rarely ever sells anything, has just sold off Berkshire's $7 billion stake in a particular company. Is this the beginning of the moment we have been waiting for? You came here for the truth, so let me unveil that for you. Today we're going to look at insiders selling billions of dollars worth of FANG stocks. Let's begin with this. You are looking at Facebook, Amazon, Netflix, and Google. Their unprecedented growth, their rise has far surpassed anything else, forming practically their own sector. They have gone leaps and bounds beyond the tech sector, and it has really formed its own special case. Looking at the rise here, it has been magical. Netflix has been the winner in the near recent past, I should say, throughout 2018, when we have seen other stocks declining, remaining stagnant. The market has been trading within a range here for quite some time, and yet Netflix has far surpassed even its peers. Quite interesting. Now I want to talk about why this is the case, and I want to just lay out some concern for everybody. What we can tell here at this time is that insiders have been selling. I'm going to show you the statistics on that. I can also tell you that in terms of the financials, in terms of the numbers, the figures, and the reports, the fundamentals, everything, it really points to the fact that these stocks are completely overvalued. You look on a historical basis, and we can see that, all of their numbers, PE ratios, everything else. Yet, that's been a few years, and the stocks continue to rise further and further and further. So what is the issue? Why not continue to ride that train, ride that wave? Many people have. What I'm noticing here is that it's the retail investors that have been really getting into the game at this time. They've been putting almost all of their portfolio into FANG stocks. The majority of their portfolio is not made up of 50 stocks, 100 stocks. They're either getting into indexes, so they're buying an ETF, or they're getting into these stocks directly, or even both. And that's fine to some degree. However, on the way down, it looks a lot more exaggerated. I can assure you, the more concentrated wealth is, the worse it's going to be on the way down. That is a fact. S&P tech versus financials. We have never gone to this range since, of course, the dot-com boom and bust. I'm not necessarily even suggesting it's going to go to that territory, and maybe we are more deserving to go into this territory anywhere near it, because now technology is even more pervasive. Definitely the market is stronger. It's not so exaggerated as we saw back in the year 2000, late 90s. But we still have to be cautious. We have to understand fundamentally what's going on underneath it, and then be prepared. We need to hedge our bets. Look at this. This is the big article for today. Insiders at tech heavyweights led by Facebook's Mark Zuckerberg are selling stock at the fastest pace in 6 years, cashing in on buoyant equity markets. Remember something. Sophisticated investors, the computer algorithms, traders, investment companies, they're making bets all the time. And the average person, they like to do passive investment. Okay, they buy something, they hold for a long period of time, and when they're ready to sell, they sell it. That's fine. You don't want to be a day trader. I can totally understand that. But what concerns me is that here now we've got insiders selling billions of dollars worth of these particular stocks, and retail investors are coming in to fill in that space. I've shown you here just recently that just before a stock buyback, we have these, either the insiders on one level or another, they're ready. They're sitting there, they're ready. They know this is going to happen. They wait for the stock to get boosted up by that buyback, and then they sell. We have confirmed that. That is officially a fact. That all of these big companies, right after the boost they get from their stock buyback program, which does in fact boost the stock, they sell. It is a fact. And this is happening. Now we have further confirmation of what I covered just previously. A lot of people were kind of upset that I did that, but I'm showing you the information. This is the information. That's all. You do what you want with it. Senior executives and directors of Facebook, Amazon, Netflix, and Google's parent Alphabet have disposed of $4.58 billion of stock this year. The FANG stocks, every single one of them, nearly $5 billion worth of that stock has been sold off, and they sell it off into the buybacks. Wait for the buyback, you get your boost, you sell off, you make a profit. They're on track to exceed $5 billion for the first 6 months of 2018, the highest since Facebook went public in 2012. That was the pump and dump, and pushed first half insider sales to $14 billion. Now it's great because you bring money in, but the insiders, these individuals, they know what's going on. The executives at these top companies know when the right time to sell is. Why would they leave it in if they believe that that money would be worth more? They could just sell it on the next buyback. Oh, we're going to do a buyback 6 months from now? I'll sell it then. They must be privy to some information. Now, can stocks rise from here on out? Absolutely. Especially the FANG stocks. I think these will be the best performers. We'll look back at this in a few years from now, depending on what's happening, and I will probably look at the stocks and say, yes, once again, just like back in 2007, the last standing performers here were tech stocks, but specifically the FANG Plus stocks. Well, I'll probably be saying that. That's usually the way it is now today. Zuckerberg alone unloaded nearly $3 billion worth of stock this year as part of his effort to fund, not true, philanthropic initiatives. Shares of all 4 companies have outperformed this year and closed on Monday near record highs. Netflix, for example, is up 88%, outpacing the 4.1% advance for the S&P. So the S&P goes up here, goes up 4%, okay? 4%, great. Many would say that's a great return. Annualized, think about that. We're not even halfway done the year, or around halfway done. And looking at this, hey, 8% gain if it were to continue like this. That would be a fantastic gain for the year. Fantastic gain. But then you look at Netflix, and it's just, it's ridiculous to see how far it's come. I mean, that's the way it is. It's not necessarily a bad thing if you're holding on to Facebook stock or a Netflix stock, for sure. So we're looking at the difference here. I mean, it's not even close. FANG stocks in general, like if you just bought all FANG stocks, or some people like to buy the ETF, which holds that for them, and that's fine if they want to do that. You're looking at great gains either way. We have seen the central banks going in. They've been printing money, buying up these shares more than any other companies. They've been doing that. We've seen the institutional investors, which have followed suit, and then the retail investors come in late to the party, and they've been buying that up as well, like little minnows chasing the big fish. Investors should monitor whether the sales continue during the next market pullback. And this is an individual from insiderinsights.com. Hang on to that thought. I'll show you it in a moment. If they continue to sell into the weakness, then that'll be a strong indicator of insider sentiment. They said basically the last time around this happened as well. So definitely watch it. And I will be showing you that on this channel. Very quickly here, we saw this a couple months ago. Berkshire Hathaway has proposed to sell its 31% stake in a building materials firm, USG Corp, to a German building company. Okay, that was a couple months ago. And now today we have this. Buffett to exit sheetrock maker USG in $7 billion takeover. That's what happened here. Warren Buffett, an individual who rarely ever sells anything at all. it's just something that he just doesn't do. He wants to hold on to it potentially forever. That's his goal. But here in this case, had to sell off. They've been through some issues in the past. He sold off this company. Now, could this be part of a greater sell-off that's coming? I don't know. We'll have to see. I mean, this company wasn't a good purchase. He said that himself. It looks like to be a loss for them. But the company as a whole, Berkshire Hathaway and their other companies, they've done well. So he lost confidence, I guess, sold it off. But I want to watch this company, and I want to watch the actions of Buffett and Berkshire Hathaway in the coming weeks and months. I think it will be very important to see how he responds to what's happening in the markets. Don't go anywhere. Make sure you watch part 2 of this video. I'm going to get into more details. Click the link in the description. See you there.